At the heart of the AI boom, there's a financial engine running so hot that its inner workings are, well, kind of hard to see. Today, we're going to pull back the curtain and take a look at the strange and you might even say intricate financial structure that's propping up the entire industry.
To really get a handle on this, let's just start with one number. Over $3 trillion. That's the market cap of Nvidia, making it one of the most valuable companies in the world. You know, in this AI gold rush, everyone says Nvidia is selling the picks and shovels, but it's starting to look more like they own the entire mine. And their unbelievable success tells a much deeper, more complicated story.
You see, this isn't just a simple story about one company. The AI economy is a really complex ecosystem, and it's built around three main types of companies that make the whole thing go.
So first, you have the chipmakers, right? That's Nvidia selling the shovels. Then you've got the AI companies, like OpenAI, who are using those shovels to mine for gold. And finally, you have the compute providers, think Oracle, who basically own the digital land. They're the ones who buy all the hardware from Nvidia and then lease out space in their giant data centers to the miners. But when you actually start to look at the money, a really puzzling imbalance pops up. You've got the most famous AI company in the world losing an incredible amount of money, while its main supplier is making profits on a scale that's just hard to wrap your head around. And this disconnect, that's the central mystery we need to solve. Let's just look at the numbers for a second. OpenAI is reportedly bringing in about $12 billion in revenue, but it's still deeply, deeply unprofitable because it's spending billions on chips. Now, on the other side of that, you have Nvidia, posting these massive profits with a stock valuation that's through the roof. So what's happening is OpenAI is spending money it doesn't really have, and that money is flowing directly to Nvidia. Which, brings up a pretty basic question. If the biggest customer in the market is losing all this money, how can it possibly afford to make its suppliers so fantastically rich? Where is all this cash actually coming from? The answer, it seems, is that the money is moving in a loop. Yeah, this isn't a one-way street. The money is actually moving in a circle, through a system that in finance is sometimes called round-tripping. It's basically a setup where investment money flows from one company to the next, and then eventually right back to where it started, making everyone look more valuable along the way. So here's how the main loop seems to work. Step 1. Nvidia agrees to invest a huge amount of money in OpenAI, up to $100 billion. Step 2. OpenAI, now with all this new cash, turns around and signs a massive $300 billion contract with Oracle for computing services. And step 3, to actually provide those services, Oracle has to go out and spend tens of billions of dollars on hardware from Nvidia. And there you have it. The money has come full circle. The implication here is pretty striking when you think about it. By investing in OpenAI, which then leads to a huge purchase order down the line, Nvidia is basically subsidizing the purchase of its own products. That investment isn't just a vote of confidence. It's acting like a very complicated, multi-billion-dollar discount that helps its biggest customer buy the very chips Nvidia is selling. And this brings us to a major contradiction. The story we always hear is that demand for Nvidia's chips is so high it completely outstrips supply. That's why the prices and profits are so high. But if that's true, why would you need to subsidize your own product? Why help create demand that's supposedly already there and overwhelming? And the loop we just looked at, it's not a one-off thing. This pattern seems to be happening all over the place. Nvidia's venture capital arm invests in tons of AI startups. And then, not surprisingly, those startups use the money to buy Nvidia chips. For other partners like a company called CoreWeave, Nvidia even guarantees the value of their chips, promising to rent any unused computing power from them. This gives them a huge incentive to buy more chips than they might actually need. Even a giant like Microsoft is reportedly getting its chip supply through a deal with a company that Nvidia has, you guessed it, also invested in. These don't really seem like the actions of a company just responding to demand. It feels more like a company that's actively manufacturing it. There's a term for this kind of thing: bubble mechanics. It's a system where company valuations get inflated by cash just moving around in circles, not because of real organic demand for a product. The point is to signal growth to the market. Every time the money makes a lap, from the investor to the startup to the supplier and back again, the stock market can reward each company, pushing their value higher and higher, even if no actual new value has been created for the outside world.
This really gets at the fundamental disconnect. The real end product here isn't the computer chip. It's the AI service that businesses and people buy. And the amount of money being made from those services is just an order of magnitude smaller than the money being spent on the hardware to build them. The market for AI might be huge one day, but it's just not that big right now.
So, this massive gap between spending on hardware and actual revenue from customers forces us to ask the big question that's hanging over this whole industry. Is this incredible growth built on a solid foundation, or are we just watching the inflation of a massive financial bubble?
In the source material for this explainer, this whole idea was summed up pretty perfectly. Looking at this whole web of investments and subsidies and circular payments, the conclusion was simply, it just seems messy. It seems like bubble mechanics to me. So in the end, we're left with a final thought. When you see money flowing in a circle, creating its own demand and inflating values at every single turn, is that the construction of a revolutionary new economy? Or is it just building a house of mirrors? That really is the multi-trillion-dollar question.